those are the couple positions that I do have on. And then these were the trades that I took today. The very first one, as you can see, we're literally reaching all-time highs like as we speak right now too. But so this morning, this was pretty much the trade of the day so far, I guess. Couldn't really find an entry on this massive rally that we got later on in the day, so I had to just miss that entire move. But we did get a pretty decent shorting opportunity this morning. Hold on, where is this? 10, yeah, it was about right here. Cool. So what I had done was, and these charts, the scaling on these charts are a little bit more difficult to really get a really great picture of it, but hold on, hang in there, be patient with me. So this was the previous high, right? This is a previous high. I really like to look for those outstanding highs and lows. There's a high right here too, but I'm talking about like those the outside of the range highs. You know what I'm saying? External highs. Is what
outliers.
Not the outliers, but the external highs.
Gotcha.
This would be like an internal high. So if this makes sense.
Within the move, kind of. You want?
Yeah, exactly. This is an internal high. This is an internal high. This is an internal high, right? And then this would be the external low that I just put in. Right. Yeah. And then this would be like an internal low. So like I'm talking about like what really sets the range. Where's the high and low that sets the range? Those are really the highs and lows that I think are best to really target. Because it's like, yeah, you could see if there's an opportunity. And I'm going to show you a perfect example because I had a loss on it today.
Okay.
After the bigger win that I had. So this is a great example. So really like to pay attention to those more external highs. So I had put in an area, right? So I had marked off the external high on this one. We ended up coming and sweeping this external high this morning because we had a little bit of a rally. We sweep an external high, and then whenever we do that, did it leave an entry signal for us to get in? And what is the entry signal again? Yeah. I like to call it an inefficiency, an imbalance, or a fair value gap is another popular term that you'll hear for it. And I like to mark those off. So you'll start to gain an eye for opportunity on where those fair value gaps or inefficiencies are kind of sitting at in the market. They get easier to see. But anyways, we started trading below that, and then we ended up selling off. And then I targeted these levels, right? So you can just keep in mind exactly what we kind of just went over, and I'm going to show you the live execution of it. Yeah. And I think it'll kind of piece together what I'm talking about. Now you can see in this one, you can see the same area that I marked off earlier today. Yeah. Same exact area that I marked off. And then I'm going to go ahead and hit play. So this one, I was literally looking off to my screen, right? We're waiting to see if this entry will come, if this opportunity will come, and literally I look back a second later and I see it selling off. But anyways, you see that highlighted area right there on the chart? So you talked about yesterday again, that's like the entry signal. Once I saw that it breached liquidity to the upside and it left that area, I want to wait for price to come back below that area and start trading beneath there to get short and then targeting the internal liquidity levels to the downside. So I'm going to start using external liquidity and internal liquidity a little bit more often because I think that will help make a little bit more sense in terms of where in the chart are we kind of looking for and what are we targeting. Gotcha. This is really interesting too, because as this plays out, you're going to see that I put in some limit orders for my exits to automatically take me out of the position whenever I do get in. And you're going to see where I put those limit orders to get out. And I think this is going to start making a little bit more sense. And then once you see how the market reacts to those levels, once they reach there, you're going to piece together this information, and it's just going to make more sense why I choose those certain levels and things like that. But anyways, we breach external liquidity to the upside. As we do that, we leave an inefficiency or fair value gap, which is where I put this rectangle. We then come trading below this. So now I'm just going to hit play. So immediately I start shorting like 20 contracts immediately because I had a little bit more conviction on this trade too. And then because I had momentum, this was a really quick one. One thing that I like to look for whenever we breach the external liquidity to the upside, whenever we do that, I like to see a lot of positive deltas kick into the market. So that's another reason why I had a little bit more conviction on this trade too. If we look down here, I don't know if you can see where it says 788 positive. It's a green one right here where my cursor's at.
Oh yeah. It
says 788. That's 788 positive deltas. We put in that many strong deltas as we breach the liquidity. So that's one thing that I like to see, whether it's on the upside or downside. I like to see an increase in the delta, whether it's positive or negative, depending on which side we're breaching, to give me a little bit more conviction to get short or long, depending on which side I'm going. Like, I like to see a lot of buyers or sellers getting in there when it's breaching that level of liquidity. But anyways, we start selling off. I start to put in limit orders to automatically take me out of this position. I debated on getting short more right here.
Really?
I debated
Yeah, I could see the rationale behind it.
because where I would have put my stop loss too, I would have put it above the wick of this candle. But anyways, I so debated on getting short more contracts right there, but I was already short like 20 contracts. So I was like, that's a pretty decent size. I don't really need to be sizing up right here too much. But you can see at the bottom where I put in those limit orders to automatically fill me my position. I wanted to target. So
This recording, are you actively flipping through your footprint chart as well as?
say it again.
Is this the recording of you actively?
Yeah, this is. I'm not even. This is.
Okay, I thought. Okay, I got you.
First, I like to take off my heavy chunks of my position. I like to take those off at the internal levels of liquidity. So keep that in mind.
So that one, the ones that are kind of in the middle, those lows, those internal lows, those are where you're kind of breaking off pieces of your position already.
Yeah, that's where I'll break off the chunks of my position because to hit the internal lows, those are the highest probable levels to hit. Yeah. So it's like that's where I'll take off the bulk. I'll take off 75% of the trade, 80, 90, and then leave the other 10, 15.
Potentially hit that.
Exactly, to hit the external. And which
I like that.
Little spoiler, I ended up hitting the external level way later today and had been a great sell-off. But anyways, I'm going to go ahead and continue this. But just keep in mind, knowing where to target. We're targeting the internal lows. This is really important to keep in mind because, again, they're the highest probability trades. Because for this trade to even be valid, for this to be a valid trade, it needs to at least hit the first internal low of liquidity. If it never does that, then this trade was a dud in the first place, and I'll put it down as a dud when I go back and journal. Now, if it hits one level of internal liquidity and then it ends up reversing and it never hits external liquidity, it's not a dud. It counts as a trade that did work out. Yes, it just didn't hit all the levels in internal liquidity. It has to at least hit one internal level of liquidity, and that will make it a valid trade. Yeah. So what I personally like to do is I like to take off 75% or 80% of the trade, and then the last 10 to 20% of the position that I have on, I'll put my stop loss of that at break even.
Gotcha.
That's what I like to do. And
so you're at least you're coming out here with something.
Yeah, I'm not getting here with something. You know the meme.
I gotcha. I like it. I like it.
You meme? I'm leaving here with something.
I'm leaving here with something. Yeah, that's right.
Anyways, so this is in 2x speed, by the way.
I figured.
So I added a little bit more right here, right there. So I added 2 more contracts, and then again, prices attractive liquidity I was also kind of peeking at liquidity from the volume profile as well. But anyways, I added 2 more contracts right there just to scalp the momentum again. So I just scalped it and then took those 2 contracts off right there. So you can see I took both of them back off after I scalped the momentum just a little bit. So I was kind of just playing around in between the middle of the trade with a super small size too. Then another thing that I was looking at, I go to the 15-minute footprint chart as well. And this gave me a little bit more confidence to hold the position because we had stacked imbalances at the top of the 15-minute candle, which can just determine short-term direction a little bit and just help, give you a better idea on where momentum is really sitting in the market. So by using a larger time frame, it also gave me a little bit more confidence and conviction, and I was just a little bit more comfortable in the trade when I saw some of those things line up. Oh, real quick, so you can see right here, we just kind of have those limit orders in right here, and you can see specifically where those limit orders are sitting. It's sitting beneath these very obvious inflection points, aka internal levels of liquidity, because we know there's a lot of liquidity sitting beneath those levels because just naturally people are putting in limit orders there, people are putting in stop losses under those levels, so they naturally orders will build up in those little areas. So that's why we have those limit orders in there. But the bulk of the orders and liquidity, aka liquidity, starts to build up underneath the external levels. That's where most of them are at, but there will still be pockets of them in between. So you can see right there, it filled all 3 of those limit orders. And then right now, you can see that I took off 75% of the position. I had originally 20 contracts on, and then in those limit orders, I scalped 2 little ones, and then when those limit orders hit, they were 5 apiece. So that brought me back down to 5 contracts total. And now I'm going to just continue to let this play a little bit.
Do you ever run into an issue of when you're waiting for it to hit that external portion of it, it kind of just consolidates and never gets there? So when you're waiting and you have that 25% left trying to hit the potential bottom piece, do you ever run into the issue of it just kind of consolidating and just never reaching that point? Like it never goes either way. So you're just still kind of sitting in the trade all day, or does it
I've never go through? It's always either stopped me out or went to the
one or the other.
Yeah, I've never been in a state of limbo for the rest of it.
For the day. Because these are a little earlier too.
I mean, this is at 30 minutes in the market open. So for it to in that range for the rest of the
unlucky.
Yeah. So you can see right here, I got stopped out at my entry price right there. So the last of my 5 contracts got stopped out, and I was never able to target a new low in the market. With that, I'm fine with that. I locked in 75%, and I didn't lose any money on those contracts by sitting in it. So that's how a live example that will look. And if I just quickly go back, you'll see me put in the stop loss right here. So I put it in right there, and then I ended up just getting right out. So that's just how trading is. It's just kind of adjusting as you go. You know, in hindsight, it's like, dang, you could have taken off the extra 5 contracts and made an extra 200 something bucks. And it's like, yeah, but also I could have made an extra 600. So it's like, I like those odds, you know. It didn't cost me anything to leave some of those on. The market's just been rallying since after it took the external low today. This is such a good example to show. I love that we have like the before and after of what happened throughout today. So let me pull this back up. So this is what I was just showing you, right? It took that external level of liquidity, showed me the entry, went here, got short, and then it sold off, right? So this was right here that I'm about to put in. This was the original external low. You can see later on, we did end up getting it. You see, we did end up bouncing and selling all the way off and taking out that external low. But look what's so interesting. After we took out that external low, look what the market has done since. The market needs liquidity to move. Nobody can predict how much the market was going to move and whatnot, but it is just always really interesting to see that the market typically makes larger moves once large areas of liquidity are traded through, or whatever the case might be. But anyways, if we were trading this and we were able to hold some of the contracts to the external low, this would have been like a literal perfect exit, because the market has been going on an insane rally all day, which is again not helping my SPY position that I got in yesterday. But you know, we're hanging on to the Celsius position. So yeah, that's pretty much what's been going on with the market today. So we had that trade, and then we had a decent one yesterday. I have the recordings of all these trades, so we can always go into them and check them out whenever we want to do that. But the market's just so resilient today. I don't know.